How do you like to control your dividends? Would you like to get pay every week, monthly, quarterly, yearly? Well, I'm going to talk about something where a growth stocks you can actually not only collect monthly, but you can actually collect weekly dividends. And stocks that can potentially go up 30 to 40% or even higher in next 1 year or 2 years. And in this meantime, you can also make extra 40, 50% from dividends. Well, in true form of dividends, how at least Investopedia is saying is a dividend is a distribution of sum of company's earning to a class of its shareholder as determined by company's board of directors. Well, what I'm going to talk about today is not truly in this case dividends because the board of directors is not going to give us anything um, because the company is a growth company. They have a revenue, but they still not making profit. But I'm going to show you how to collect extra 10, 20, 30, 40, 50% a year top of the growth, stock growth. So let's talk about how we're going to collect extra 30 or 50%. So I'm going to use example. Let's say you own a stock, right? And to write a covered call, you do need 100 stocks. So let's say you own company ABC and you own 100 stocks of that. And you bought that stocks at, let's say, $50, $60, or $70, doesn't matter what price you bought in. And you're hoping in 1 week, if the stock goes from, you bought it at 60, if it goes to $70 in 1 week, you are happy to give up the stocks because you don't think in 1 week it's going to go to $70. So you sell a cover call. Because you have 100 stocks, it automatically becomes covered call because you have some stocks to give up if you get called for it. Let's say you collect a dollar premium. If you collect a dollar premium, so $1 times 100, so you're collecting basically $100. In that case, your break even becomes a $71 because if the stock stays below $71, you are actually making money. I mean, regardless whatever happens, even if a stock goes more than $71, you're not losing money. But you're in theory you are because, well, if you didn't sell the covered call, you could have sold the stock. Let's say it went to $75, you could have sold it for 75. So that's the downside. When you sell a covered call, you don't know what the stock is going to go, how far the stock can go up. It can be it can go from 70 $60 you bought today on Monday, and then it can go all the way to $100 in 2 days, right? It can happen. So that's the downside. You're going to lose the stocks if the stocks hit your strike price. But if it doesn't, then you still get own that same 100 stocks, but you're in meantime collecting premium. Think about the best example I can give you is a car insurance, probably, or house insurance. So you have a car that, let's say you have insurance from some company, Lemonade, Geico, whatever company you have. You're paying every month, you're paying them a premium $50 or $100, right? They're not giving you anything back unless you get into an accident or something when they come and pay. So think about how profitable insurance companies, same way covered call could be a profitable for you. And I'll show you a couple of them that how I have been making money where 10, 20, 30, sometimes 60% a year. And I'll go over those. So let's go with one of the example that I've been doing, and it's a great company. And ARK Invest is buying left and right, and I think it has a growth story too. So I'm going to talk about that company. So the company I'm going to talk about is DKNG. I don't think it needs an introduction since almost everyone talks about DKNG. ARK is buying, I mean, they are buying a lot every week. Even in the down days last couple of weeks, almost last month, middle of February to first week of March when market was down, ARK is still bought lots of DKNG, and I do believe DKNG has a growth story. I'm not going to go in details about why am holding DKNG, but I'm going to talk about how I have been making extra money every week from DKNG, regardless if it's going up or down. So I pulled a DKNG option chart. So let's look. So this is week of 0326. This is the week that option is going to expire. Um, I wouldn't sell something on the 19th. I mean, tomorrow is Tuesday, right? So I'm going to do something, let's say, on the 26th. So let's look into it. Right, there are a couple of things you can take a look. I mean, you can open on your broker account and see other information. Couple of things I look into. Okay, so let's say in this case, I actually bought the stock recently. My stock, I think I bought it at $62. And then what I did last week, I sold a covered call for $70. I looked into a couple of things, but let's say if I'm doing 26, the stock price today is $67. And what I'm looking into a couple of things before I sell, okay, what is the IV, right? The higher the IV is, the more premium I'm going to get. I do see our IV is kind of 71 something, right? Which is not bad. I typically look for anything higher than 70 when I'm selling a covered call. So this is not bad at all. The next item after the IV, I'm going to look into Delta. Now, if you use another platform where they can tell you the probability, then you can use that instead of Delta. My platform doesn't, so I've been using Delta. But so the main thing I'll be looking is Delta. The way Delta kind of works in high level is what is the probability that the stock is going to hit that price on that given day. You can model it out and do other fancy thing, but I don't think it's really needed for weekly covered call. So if I'm selling, let's say, if I'm selling for March 26th, I'm probably gonna wait to see if the stock price goes a little higher at $70 or so, so I get more premium. Um, And typically I would wait, let's say, to sell it on Tuesday or Wednesday for next week on the 26th and try to close it as soon as I hit some profit or roll it over. So probably by next week, uh, Monday or Tuesday, I would close it. So let's take a look. So the first thing I'm going to looking at delta. So if it's at 41.41, there's a 40% probability it's going to go to $70 by next week. But my goal is I want to still hold my stocks, but I want to make some money. So, well, I can do 29, which is 73. There is 29% probability that it's going to go to 73. I can collect about $1.50. That gives me 73 plus $1.50, 74.50 is kind of my break even. But let's say I still want to hold and I don't think I want to sell it at 73. I can go to lower probability or delta, which is 26 at 74, and still collect about 130 to 135, right? That gives me $75.50. And this is where some of the charts and other technical things may come handy. So why I'm saying looking at the chart, so all-time high was about $74, right? And then last time it hit about 72, it got rejected, 74, it's getting rejected again, coming down, right? That's kind of what I'm looking, that RSI, that as soon as the RSI, every time I'm looking that DKNG at least, as soon as it hits 70 RS or so, it kind of drops heavy, like from 74, it's all the way to 67, right? That's kind of what I'm looking at. Okay, what's going on? At Do I think it's gonna go in 1 week? 75, right? So let's say I think it may try to hit all-time high at 74 or even try to break out 75 in 1 week, right? So I gotta be careful. Um, but see, the lower delta I go, the less premium I'm going to get. So it's all gonna be depend what you think that you would let go the stocks, right? If I get if the stock goes to $80 by next Friday, I don't mind selling. I think then it's going to drop back again, right? So I can still collect 61. But with my thing, I don't think it's even going to hit 75. All right, even if it hits 75, I think it's going to drop. Just in case I could be just selling for 20 delta, right? And still collect $1, which is not bad. Your strike price is 76 and you are collecting another dollar, so it's 77. That's kind of where you're selling. So if you bought at $60 last week and within 2 weeks you're selling at 77 dollar, which is not bad. That's pretty much about what 24% in 2 weeks. That's really good. Now imagine you are able to collect this $100 every week. There are 52 weeks. You're collecting $100 every week. That gives you $5,200 a year. And if I divide by 50, 200 divided by 60, 200, which is my original cost of my 100 stocks, right? That gives me 83% return in 1 year. If you don't call this hyper growth dividend, I don't know what to call it. I mean, even S&P 500, the best last year or any other year, even any bull run, never went gonna give you 83%. So just by doing covered call from DKNG in within 1 year, I can pretty much make up all my money, right? Fifth, I invested 6,200, made up doing covered call 5,200, right? And top of that, if the stock goes to $100, let's say not 100, let's say within end of this year from $62 I bought, it goes to 85. So 85 minus 62, that's 23 divided by 62, that's 37, right? So 37 plus what 81, I believe I said. Um, That's about 118% in 1 year. That's pretty good. I mean, I wouldn't even consider gaining anything from the stock if I can make 81%, even forget about 81, even if I can make 50%. So there are 52 weeks. Yes, there are some weeks that I'm not going to be able to sell a covered call because of the dynamics of the stocks. Maybe the stocks just broke out and I don't want to lose my stocks, and I think the stocks has some growth. It can go from $62 suddenly to 85, right? If there is a breakout or something. In those weeks, I'm going to hold. So let's say in that scenario, instead of 52 weeks, I do $1 times 100. There are 100 stocks. I'm collecting $1 premium, right? That's 100. Let's say I do only 30 weeks. That's still 3,000 divided by 6,200, which is my original cost. That's still 48% ROI, right? Top of all the growth I'm going to get on the stocks like DKNG. This is what I call that whenever you're in a problem and you want to make some extra money, right? If I can make extra $100 every week, well, I'm going to invest, right? I'm going to reinvest. Maybe I'll buy some more of DKNG. Maybe I'll buy some other stocks. Just to show that what I'm talking about, actually, I have been doing it. So this is DKNG. I bought it back in June, I believe, at $30. I sold a couple of times and rebought those stocks again. Again, I look for breakout. Once I think the breakout is over, I sell it and then I wait for a dip and I buy it again. And then I've been doing this covered call every week. Not every week, but every other week, every month, based on what I feel. So typically I have one lot or two lots, or basically 100 stocks, or sometimes 200 stocks. But if you see just for 6 months, from this 100 or 200 stocks, I collected over $6,000. And I believe you can do it too. If you want to talk about it or you want to look into my other trades, feel free to join my Discord channel. It's free for everyone and it's going to be free forever. That's a promise. So join my Discord and we can talk about other stocks I've been doing for other things like Workhorse, um, or not only Workhorse, actually every stocks I pretty much own. I try to do covered call because this just gives me extra income every month, and I reuse, right? So this 6,000, technically the 100 stocks DKNG I have right now is pretty much paid already from my covered call, right? So I've been doing it. It brings me extra income that I can always use to buy other stocks. Um, All I'm gonna say, there is a downside, like I mentioned. So let's say you sell the Dikembe at $75 or $76 at a strike price, and suddenly it goes by 26th. 2 weeks from now, it goes to $80. If you're sold at 77 or 76 and you collected dollar, 77 is your break even. So technically you're losing $300 because it went to $80. But imagine it doesn't go to $80, it doesn't even go to 75, it goes back to $65. Now you collected an extra $100. Next week you do the same thing, you keep doing it and keep doing it, and you keep making extra money. And well, you're holding a good stock for your long-term portfolio. So why go for solid dividends when you can make your own dividends, right? That's what I'm talking about. You can make your own dividends every week, every 2 weeks, right? So I look for stocks in my long-term portfolio or short-term portfolio, mostly stocks that has weekly option that can, so I can trade every week or every month. I don't like selling, at least at this market. I wouldn't do covered call anything more than a month because the stock can is market is right now crazy, right? So one day it can go 10% up, another day 50, next day 100% down. So this is why I've been doing weekly, looking at the chart, looking at fundamentals. If the stock is good, chart looks good, well, time to sell a covered call, make some extra money. Have a good night, have a good morning, enjoy your rest of the week. Hopefully you guys do well.